Welcome back. Now, in northern Kenya and southern Ethiopia, households typically keep up to 100% of their productive assets in livestock. In times of severe drought, they lose most of their animals and many are left destitute. That's because they have no insurance to protect them. Now, there is hope for them. Andrew Mude, a Kenyan economist, and his team have developed something called index-based livestock insurance, which is designed to change the fortunes of these livestock keepers. Andrew, welcome to Africa 54.
Thank you very much.
Yes. Now, start by just educating us a little bit what this index is all about.
Well, the index is a means to providing the risk management benefits of insurance to this population, a population of livestock herders living in the drylands of East Africa, 20 million strong of them, 50 million across sub-Saharan Africa. And essentially the biggest challenge they face is, as you said, their key productive asset gets knocked out by severe drought regularly. And this forces them into sedentarization and makes it very difficult for them to use their key source of livelihood to climb the ladder out of poverty and to prosperity. So the index uses satellite readings of forage availability on the ground. And since in these herding systems, livestock or the grass in the rangelands is really the only source of nutrition. So if the satellites can tell you how much grass has grown over a particular season, if the season is bad, there's forage scarcity, you compare that with previous seasons, because the satellite data is readily available across time and space, freely available, you can then trigger contracts that pay out to the pastoralists.
When people hear insurance, they expect payouts in case of loss. So what exactly, how does a farmer specifically benefit from this as an individual?
Yeah, certainly. I mean, that's exactly what insurance is supposed to do. When you have a situation of loss, then you get paid out. And when we started off, the type of insurance we're providing is what you'd call a livestock life insurance. It was to protect or to replace the asset upon event of loss, and that's when you'd receive your indemnity payments. So payments were made, for example, there was a large drought in 2011. Yeah. Payments were made then.
So who's paying?
Well, right now it's the insurance companies that are paying. Pastoralists themselves, they purchase the product, so they pay the cost of what we call the cost of the risk. And on top of that, the government and donors, the World Bank, USAID, DFID, the EU, Australians, they support the subsidy above that.
To what extent are these farmers buying into this? I mean, the whole concept for them must be very new. So how do you get through to them to convince them to buy? Yeah,
certainly it's quite new. Insurance is new. Satellites are new to them. So a big part of trying to convince them and ensure that you're catalyzing informed demand, that when they purchase, they know what they're purchasing, is education, is a campaign of learning. And so a lot of work has been done on that. And there's a critical mass of understanding. Another way that it helps is those early purchases of insurance. When payouts begin to happen, those neighbors who were sitting back waiting see the benefits and they start to purchase. So now we're seeing an increasing number of pastoralists purchasing this product, northern Kenya, southern Ethiopia, the government partnering with insurance companies to spread out the provision.
Is there also any form of education on, the need to reduce the numbers? Perhaps could be, farmers made to feel that they could be penalized for keeping just too many without consideration to the environment, to their space?
Yeah, there's certainly a lot of work, complementary work, some of my colleagues doing to try and increase what we call marketed offtake. But actually, the insurance themselves, one of the reasons that pastoralists hold on to their livestock is because this is the only savings they have, only form of asset. And so the more they take into a drought, even though a drought will come and hit, the more they will get out of it and they will regenerate.
That's another form of insurance.
Exactly. But if you now have insurance, actually some of our studies are seeing that households with insurance are more likely to sell off more. And that's because they now have this other risk management mechanism and they don't have to insure on the hoof, so to speak.
All right. So let's hope, this really changes their way of life and also their economic state of affairs. Thank you very much for joining us today and sharing with us. Andrew Mude is a Kenyan economist and also a co-developer of the index-based livestock insurance.